Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of January 20 to January 24th, 2025. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of heightened market volatility as investors react to Donald Trump's return to the White House and the implications for U.S. monetary policy. With the Federal Reserve's rate cut trajectory in question, the dollar and Treasury yields have surged amid renewed inflation concerns. Meanwhile, Japan's central bank is edging closer to its first rate hike in decades as rising wages and inflation bolster the case for tightening. In Europe, the euro and pound face mounting pressure ahead of key PMI releases, while traders in Canada and New Zealand await critical inflation data that could shape central bank decisions. As policymakers navigate these shifting dynamics, global markets remain on edge. The U.S. dollar and Treasury yields have surged as expectations grow that the Fed may take a cautious approach to rate cuts. Trump's tariff pledges, corporate tax cuts, and deregulation plans have raised inflation concerns, while a strong labor market supports the case for steady rates. Fed funds futures price in 40 BPS of cuts by December 2025, more hawkish than the Fed's dot plot, which signals 225 BPS reductions. This comes despite softer than expected December CPI and reports suggesting a gradual approach to tariffs. The Bank of Japan will kick off 2025 central bank decisions on Friday, with markets increasingly expecting a rate hike. Despite holding rates steady in December, Governor Ueda emphasized the need for more wage and inflation data before tightening policy. Since then, inflation has accelerated, wages have risen, and policymakers, including Ueda, have signaled growing confidence in pay hikes. Investors now see an 80% chance of a quarter-point increase, suggesting the BOJ may act sooner than previously expected. The Eurozone and UK will release preliminary S&P global PMIs on Friday, with both currencies struggling amid widening policy divergence. The euro has weakened due to expectations of ECB rate cuts, while the pound faces economic concerns and fears of a repeat of the Truss-era instability. Recent UK data, including weak inflation, GDP, and retail sales, have added to the pressure. Markets expect the ECB to cut rates by 95 BPS and the BOE by 60 BPS in 2025, outpacing the Fed. If PMI signal further economic weakness, the euro and pound could see deeper declines. Following the US CPI release, Canada and New Zealand will publish their inflation reports on Tuesday. Despite strong job gains in December, markets still see a 65% chance of a 25 BPS BOC rate cut on January 29. A hotter-than-expected CPI print could lower this probability and strengthen the loonie, with Monday's BOC Business Outlook survey also in focus. For the Kiwi, inflation data will be crucial in shaping RBNZ policy expectations. If price pressures remain persistent, it could delay rate cuts, impacting the currency's trajectory. Traders will closely watch both reports for market direction. This week has been marked by pivotal economic and political developments shaping market sentiment worldwide. Trump's policy agenda has introduced fresh uncertainty around Fed rate cuts, while the Bank of Japan appears poised for a long-awaited shift in monetary policy. The euro and pound remain under pressure amid growth concerns, and inflation data from Canada and New Zealand could set the tone for their respective central banks. As markets digest these key events, the path forward for interest rates, currencies, and global economic stability remains a focal point. Stay tuned as we continue to monitor these evolving trends and their impact on investors and policymakers alike. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.